Hey guys, Sean Pruitt here, president of Kingdom Exploration. So you might be on the fence about oil. Maybe you think fundamentals are not impacting oil right now. It's all propaganda. Or maybe you're on the fence of, hey, green energy is going to save the day. Oil demand has peaked. We're not going to see an increase in oil demand. Okay. And there's two different camps, and I'm not asking you to come over to my side of the camp, and I'm not going to yours, that's for sure. But what you have to understand is that oil prices at this price, regardless if you agree with it or you don't, it's not profitable. It's not incentivizing the oil and gas industry for new oil developments. Shale oil and gas is the most expensive barrel of oil to produce. At these prices, it's uneconomically feasible for them to spend more money to add more supply to the markets. Number one, shale is not as profitable as it once was. Okay, if you read a recent post by Art Berman, oil wells in the Permian are now producing 40% less oil than they were pre-pandemic. Efficiency gains are merely a front-end loading production. Okay, now you're probably wondering, okay, who cares? You know, it's everything. All right. You got to understand, you got to look at history to understand my point. We were producing 8.9 million barrels a day in the U.S., okay? We were producing 8.9 million barrels a day in 1985, and then by 2005, we had a slow decline and we lost almost 4 million barrels a day. That's because they were running out of places to develop conventional oil. So we had a slow decline. So every time there was a bomb dropped in the Middle East threatening Saudi supply or Saudi disruptions in any way, whether it's relationships, whether, anything that happened in the Middle East, oil prices would skyrocket. So now all of a sudden we went from 5 million and we grew to 13.1 million barrels a day, February 2020. Okay. And so now all of a sudden it's like, hey, Saudi Arabia, we don't need you. We've got plenty of supply. We don't need you, Russia. And it's actually not the case. But on paper, it just seems like we're doing very well. That has caused the price escalation of $100+ oil to stay in check. Okay. And so the Energy Information Administration keeps reporting, hey, shale is on the rise, shale is increasing. And that's actually not the truth. Okay. And so the truth is that they are increasing the oil output in lesser assets. Okay. So normally when you start tapping into lesser assets, you start producing like half the production. Okay. Well, the only reason why they're able to keep their numbers up is because they went from 4,000 foot laterals going sideways, 4,000 feet into an oil bearing formation. And now they're sending in 15,000 foot laterals. So it's like sticking a straw 3 times longer in tapping into 3 times the structure as before, but they're only producing twice as much. They should be producing 3 times as much. So they're producing half as much oil as they did in the predecessor wells in lesser assets, okay? And they're producing them faster. So it looks like they're producing more oil, but in reality, the truth is that they're just extracting it faster. Okay, it's kind of like getting a middle-aged man who hasn't ran in 20 years, get him to run 100 feet. Okay, get him to sprint 100 feet, record that, and then extrapolate that for a mile. Okay, well, first off, nobody could. If he was to run a quarter mile, he would have a heart attack. Okay, it's impossible. But the Energy Information Administration and reporters and journalists are taking data, recent data, from the Permian, from different shale patches and say, hey, look what they're doing. Let's extrapolate 1,000 years from now. We'll never run out of shale, and that's not the case, okay? So that is putting a wet blanket on any news that's happening in the Middle East. For instance, just recently, F-35 jets carried out the raids and used bunker buster bombs by the Israel Defense Forces right on the central headquarters of Hezbollah terror organization. That happened today, okay? If this was 2008, oil prices would have jacked up to $200 a barrel. Oil in 2008 under George W. Bush went up to $200 a barrel, $160 at the time to $200 at today's prices. So here's what you have to understand. The longer we stay in this position of $68 oil hit $60 a barrel when the markets crashed. The financial collapse in 2008, oil crashed down to $60. Okay, back then it was like $43 a barrel. At today's prices, it's like $63. Okay, we're just a couple dollars away from that. That's insane. Not only that, Okay. Back then, it was conventional oil. Conventional oil is a fourth of the cost versus unconventional. Shale is the most expensive barrel of oil to produce. It's unprofitable. And then you also have larger shale companies that don't have the incentive to develop, that have capital discipline. They don't want to make the same mistake that they made from 2012 to 2020, where they drilled themselves out of business. Okay. They had record-breaking during COVID, record-breaking shale companies going out of business because there was just too much oil. Okay. So here's the difference. Today, oil demand's much higher than it's ever been. Oil demand is at 104 million barrels a day. And if you look at some reports that OPEC is putting out, and I trust OPEC. I really do. They've been the most accurate when it comes to, they're not controlled by manipulation. They just look at the numbers and then they report what they're seeing. Okay. Where the West, it's all propaganda. It's like, hey, the green energy unicorn's going to save the day. Oil demand is declining, and that's so far from the truth, okay? OPEC boosts long-term oil demand outlook driven by developing world growth, okay? And so OPEC expects world oil demand to reach 118.9 million barrels per day by 2045, around 2.9 million barrels a day higher than expected in last year's reports. The report rolled out its timeline to 2050 and expects demand to hit 120.1 million barrels a day. So with all the markets thinking that, oh, we're going to reach peak demand much sooner and it's not going to be as much and green energy is going to fix everything, we are undersupplying the markets, okay? And OPEC is sounding the alarm saying, hey, we're going to have a lot higher demand, and everybody is thinking that we're going green, and everyone is putting their faith in shale, and shale looks better than it really is. I mean, shale's at a sprint right now, and they can't make it. They're going to have a heart attack. OPEC also raised its medium-term demand forecast, citing a stronger economic backdrop than last year as inflation pressures wanes and central banks start to lower interest rate. World demand in 2028 will reach 111 million barrels a day, OPEC said, and 112.3 million by 2029. OPEC's 2029 forecast is more than 6 million barrels a day higher that of the Information Energy Administration. So the IEA is American Energy Information Hub, and it's ran by politics. The leadership for the IEA is a very strong green energy advocate, very anti-oil. And there's an agenda, such a strong agenda there, okay? And so where OPEC, obviously, if demand was going to be lower and green energy was going to be replaced, then the Middle East would be transitioning to prepare for that, okay? But they are still focused on producing oil because that's just simply the truth, where the West is telling the whole world and lecturing the whole world, hey, we got to get off oil. They're not really listening to them. But they're in their pride and in their arrogance, they think that everyone's going to follow them. And they think that green energy is actually going to work. But in reality, it's not the truth, okay? Electric vehicles are poised for a larger market share, but obstacles remain, such as electricity grids, battery manufacturing capacity, and access to critical minerals, it's said. And so here's the thing. Everybody is wondering, where are oil prices really going to go? And they look at the current price, they look at the news, and all of a sudden they have negative thoughts about it. So what do? They don't invest into it. And so when you reduce the amount of capital being spent on oil investing, on new oil developments, and when you put the price of a barrel of crude to a level that is unfavorable for large shale developers to explore, to develop even more oil, you disincentivize the oil and gas industry to find more oil. All you're doing is setting the stage for much higher oil prices, period. And with what's happening in the Middle East, I truly believe that after the election, I think it's on. Iran has become very rich under the current administration. So why would they do anything to risk the chances of an administration being in place? Because the past administration used maximum pressure on Iran and they became broke. And then under the current administration, they became very wealthy, very rich. Okay. Putin himself is wanting the current administration to stay in power. And so the Middle East, the ones that have the ability to cause oil prices to go up by escalating the war or waiting till after the elections to really do something here. I truly believe that this misinformation that you're hearing over and over again about oil, peak demand is coming, shale is growing, green energy is replacing oil. It's setting the stage for there being an undersupply and oil prices going much higher. The emerging market demand is increasing. And all the negative news that you hear about China, China is continuing to buy oil, and they have cheap, inexpensive contracts because of the situation. It's very beneficial to countries like India and China. They're buying a lot of cheap, abundant energy right now while they can. And the strategic petroleum reserve at $68 a barrel, they should be buying oil, but they don't have the cash to. Okay, very interesting. And so as BRICS continues to strengthen and organize, they are going to cut off the West and their power to manipulate and control prices, because the New York Stock Exchange and the Intercontinental Exchange controls 80% of the world's oil supply, the price of it. Okay, and so BRICS, the formation of BRICS, because BRICS will control 45% of the world's oil supply. Okay, and they're going to price it and dictate what it's sold for, versus allowing a company like BlackRock and ESG in the West to dictate and control that price. I truly believe that what we're seeing in the news today is really what's driving the oil markets, regardless if it's truth, fact, or fiction. It's what is controlling the price of a barrel of crude, and that's very dangerous because we're messing with the world's needs, and energy has been the catalyst for growth. If you doubled the price of a barrel of crude from the days when America was during the golden age, when it would slow the growth down tremendously. We wouldn't be the country we are today hadn't we had that relationship with Saudi Arabia. There's absolutely no way, okay? And so without cheap, abundant energy, you cannot grow at the rapid rate that we did. And these emerging markets have billions and billions of people. We only have 300-something million people, and we're consuming over 20 million. We have yet to really scratch the surface with these emerging markets and their demand. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. And if you have any thoughts about this, please comment below. Please share this information with your friends. The analytics do not like this video. All right, guys, we'll talk soon. Thanks.